Welcome back. The big story, of course, this morning is going to be the TCS numbers and what it means for the rest of the IT space. Rima and I caught up with the top TCS management to talk to them about the first quarter performance. First up, we will listen into the company's managing director and CEO, K Krithivasan. TCS also has a new chief operating officer, Aarthi Subramanian, who's executive director, president, and chief operating officer. I began by asking Krithivasan about the decline in constant currency terms, which is 3% compared to street expectations of about 1.5%. Listen in.
First of all, you need to decipher the number. This also included a minus 2.8% of BSNL degrowth. It's when I say degrowth, there's nothing wrong because we more or less completed the initial phase of the program. So there's very small portion left. And international revenue went down by minus 0.5. And like I was telling Rima before this interview, we probably would have felt somewhere around another 100 basis point is where we were thinking we will close the quarter with. But even during if you remember in April, we did talk about continuing uncertainties which we are not seeing in January, February, started coming back in March. So that continued, and then we saw more projects getting delayed, paused, decisions delayed. So collectively, and the certain customers wanting to conserve cash. I think it's a question of overall global uncertain macroeconomic situation.
But the BSNL deal, I mean, there was well understood that it is ramping down, right? That's coming to a close.
Yeah.
So that was anyway supposed to happen.
Yes,
I think
absolutely.
the numbers
Absolutely. I'm not saying that that's what I'm saying. See the numbers in the context of minus 3.3, in the context of how much is the BSNL ramped down. And as I said, international, maybe another 100 basis point, I would have been happier. But this is the uncertainty or the unexpected nature of the overall customer's decision-making behavior that delayed things.
So how many deals got paused, deferred, any cancellations?
Not many cancellations, but delays, right? Like there are situations, there are sometimes where you have about 1,000 people working on a project. Customer decides that they can go slow, and then they say, I don't need 1,000 people, I need only 500 people for the next few months. And they're willing, because of the overall situation, they see they can deprioritize or postpone the programs. So I don't want to quantify how many, but few.
But what led to the disconnect between your own expectations and how the quarter played out? Because even when we spoke last time, that 90-day pause, tariffs being was there.
See, we in fact, if you remember, last time I was telling that I was expecting this to be short-lived. Yeah. Okay, it was not short-lived as I thought. It's continuing. Like if you, we hope that sentiments revive soon, but.
So you think Q2 is also impacted? I mean,
too early to call. One, you know that we are not going to comment on Q2. See, the overall situation, we have a good pipeline, good order book. We are winning reasonably well in the marketplace. So once the sentiments improve, we should be in a good position.
No, but there's no sign from the there's no sign from your clients who've paused the deals that they want to restart anytime soon.
Not immediately.
Not yet.
And last time you told us that those pauses are tactical in nature.
Yeah.
I mean, they're not.
Yeah. Even now I'm saying because last time also I said, now I'm saying most of the companies have a huge technology debt. They have to spend. It's a question of timing.
Aarthi, it's interesting, as they say, may we live in interesting times, right? And these are interesting times. And how would you characterize the environment in terms of what you've seen in the company so far, and what are you driving at within the company?
I think, like you said, I think these are interesting times. And if you look at what my focus is, we're looking at driving growth across our service lines. Like Krithi said, this quarter, if you look at it, our new age services have grown. So if you look at whether it's AI, it's cybersecurity, or interactive services, many of the new age services are doing well, and they have deliver growth this quarter. And specifically, since AI is a topic that everybody is most interested in, and if you look at AI, this quarter, if I look at where the growth has come from in AI, I would say that it has come from 3 areas. One, industry-specific solutions that our customers are building. Second, Krithi talked about technology debt, so customers are turning to AI to really modernize their technology estate. So I think that's an area which is showing an uptick, especially in some industries. And I would say the third area is where, as you start moving from pilots to more scaled ROI projects in AI, customers are looking at how do you do this at scale. So looking at...
Is there a way to define AI revenue? This is what we earn because of AI projects.
See, we're not doing that for a reason because AI is all pervasive. Sure. It's there in every service line. So it's hard to just call out a part of the revenue as a AI revenue.
Is it deflationary in terms of pricing?
No, I don't think so.
Okay. Because revenues, the top line it'll drive, but and we've discussed this in the past, that as we go forward, eventually customers are going to say, well, you're doing a lot more with a lot less, so well, give us the price advantage that you're seeing.
It won't be a deflationary in pricing like Aarthi mentioned.
Okay.
But we believe that AI will enable you to do more than with less. Okay. But as I've been telling, eventually you'll be doing a lot more than what you're doing today. Because that will ensure that we have enough opportunity for what we have today and what we'll have tomorrow.
Aarthi, you come in with a fresh perspective in that sense. For the last 2 years, the growth has struggled a bit, or it was propped up on account of BSNL. This is a tough year for the entire industry. Do you think, in a way, the company needs to look at the growth versus margin trade-off? I mean, what is your own opinion on this?
See, I think our philosophy or direction, as you may call it, has always been profitable growth.
Yeah.
Right. So I think if you look at all the new age offerings, I think there is enough demand. And especially when you look at AI or enterprise solutions, public cloud implementations, I think the demand is out there. So I think we just need to drive growth.
But you said it's profitable growth, but growth has been missing, right?
No, but we need to drive the growth.
Okay.
So I think while retaining margins, and that's what we intend to do.
So actually, we have always talked about. We believe good growth will actually give you more. Growth, lack of growth, probably puts a pressure on margin. But margin doesn't put a pressure on our growth.
Growth solves most problems, as they say. Krithi, just one thing. So actually, just completing the BSNL point, there was expectation that as BSNL winds down, margins will improve. There will be a lift to margins. That's not happened. You've also won a new BSNL order, right?
New BSNL order has not kicked in.
It's not kicked in.
Not kicked in yet. We did have close to, I think, there was an improvement, a tailwind because of BSNL, but we also put more, we had more headcount this quarter. Okay, we be expecting more growth. We had actually added a lot of people in the beginning of the quarter. So that put additional expense towards manpower and compensation. So I think as we fine tune our overall manpower expense and other expenses in the next quarter, because this was a fairly turbulent quarter. We started off the quarter thinking that we need to be ready for all the demand.
Sure.
But when it doesn't happen, you already staffed up the people.
Sure.
But our hope is that in the next quarter...
The new TCS BSNL order, will that add anything to... I mean, there are some expectations it should be 1% of revenue for the full year. Is that... It'll add 1% to the revenue growth this year?
It could be in that range. It could be in the range.
What's the size of the...
If you have not published it, we are not going to tell you here now.
$350
From
million.
a size perspective, it's about 22,000 sites, I think. Okay. So 1/4 of the original order.
So since you call the times turbulent, last time you said that growth in FY26 should be better than FY25, at least for the international markets.
Still, for the international market,
despite a drop,
I'm still confident because we had a minus 0.5% here, but I think overall for the year we'll be able to do better than what we did in FY25 on the international markets. We're quite confident.
And overall, will there be growth in FY26 over 25?
Growth, yes. Growth better than FY25, we'll work towards it, because we had about, I think, 4.2% growth in FY25. To reach that, that's looking like a tough number now. But definitely growth, definitely international growth to be better than FY25.
You know, the other number is deal bookings, right? About $9.4 billion. It's lower as compared to what we saw. And that also should that raise doubts about revenue visibility going forward at all?
See, Prashant, we always been saying our comfort range is between 7 to 9 billion. Okay, and last quarter was about 12 billion, and it was a fairly one of the best quarters we had. And TCV tends to be lumpy. I don't think it is like revenue, like, because sometimes you win some huge deals. Clients want to close towards the year end. They want to sign. Order bookings tend to be more. This is nothing to kind of be concerned about. In fact, we are quite happy with the order bookings for this quarter.
Aarthi, can you provide some color vertical-wise? I know the problem areas, we spoke about it last time, was auto, retail, etc. But since growth is much worse than what you had anticipated, which sectors face challenges, and going forward, which are likely to still remain under pressure?
I think our technology, software and solutions vertical has done well, as you would have seen in the numbers. I think manufacturing, it's hard to club it into one. I think the challenges are in the automotive sector, and which is a global phenomena if you look at it. But within life sciences, healthcare, if you see again, healthcare has grown this quarter, and if you look at BFS, right, there are certain segments within BFS which have grown. So it's sort of, some verticals have grown well, and others hopefully will be able to drive growth in the next quarter.
Krithi, you want to add to the problem pockets that you see going ahead?
See, like the slow, definitely, like we had Europe had probably Europe had a bigger negative growth. In fact, North America, as you saw, has a small moderate positive growth on a Q1Q basis. UK had again degrowth. In fact, interestingly, if you take BFSI North America, BFSI UK, both of them had a small growth. BFSI UK, Europe was a issue. So, and like she said, auto is an issue, but industrial did well, aerospace did well. And so there are in fact, our tech services, almost all sub-verticals of tech services did very well. So there are pockets of growth. There are some areas where we will recover.
And why is banking weak in Europe?
Banking is weak in Europe for, that we've been doing a large deal before, okay, and that's also coming to a close. So that's one of the reasons where we have extra pressure in Europe.
Krithi, just to sort of wrap it up, how would you describe, as you go forward into Q2? It's Q1 has seen a sharp. Will we kind of, if this is more of a one-off, will we see a sharper recovery in that bounce as well in Q2?
I don't know whether Q2 will be a quick bounce back. I don't want to call it up, because I've been beaten with what I said. In Q1, I was quite confident. Like Q2, I'm not sure. Like we have to wait and watch. But I'm still confident about medium to long term. Like there is a lot of work to be done, and the order book is good, and our client conversations are good. So medium to long term, I'm still confident. And as I said, I'm still confident of having a better international growth in FY26 or 25.